Welcome to Trading Nation, everyone. Let's talk about markets and what to expect in the new year with Art Hogan, Chief Market Strategist at B. Riley FBR. Art, a pleasure to have you on the show. Your target for the S&P 500, 3,000 for this year. Help us understand what you use to get to this target.
Yeah, that's a great question, Seema. So as we look at the impact of what tax reform will probably have on earnings for the S&P 500, we're having about $9. So without tax reform, we would have been about $9 below where our earnings estimate is for the S&P 500. And if we put the current multiple, so the current forward multiple on next year, that gets us to 3,000. If you tack on a 2.25% dividend yield for the S&P 500, you're probably looking at about 11% return. Certainly pales in comparison to last year's 20% return. But it's certainly a very positive viewpoint towards what equities could look like. The one thing that we'll tell you, though, is we don't think we get there in a straight line very much like we did this year. I think we'll probably have to visit some volatility before we get to that end game of 3,000 in the S&P 500.
Some big gains across the board in 2017. Which sector do you think will see the biggest gains or has the opportunity to outperform here in 2018?
That's a great question. So, obviously technology had a massive year, especially around artificial intelligence, around things like the cloud. Semiconductors had a career kind of performance last year, and I think that's probably going to temper a bit. I don't think we're going to see that kind of explosive move in technology. I think that leadership shifts probably over to financials. I think financials are clearly a beneficiary of tax reform. They're a beneficiary of repatriated capital, and they certainly think they're going to be a beneficiary of a lighter regulatory touch. I think energy didn't keep up with what was going on in the commodities market. The energy equities and the energy commodities seem to have dislocated, and I think they'll probably come back into unison. I think the commodity market being driven more by demand than it is by supply, and I think that's a very positive thing. And I think the mid-cycle industrial companies, the cyclical industrial companies, have a great chance to outperform next year. So, for your top three sectors, I would say financials, I would certainly say energy, and I think the industrials are going to have a great 2018.
Is there anything from Washington that could derail this rally?
Well, it's interesting. So, Washington's going to be a midterm election cycle. The only thing I think that, could possibly come out of Washington comes out of the administration. I think that's going to be a mistake, perhaps walking away from NAFTA or, tweeting our way into a trade war or something that escalates into a military event that doesn't need to. But in terms of legislation and working on things like infrastructure, I think that's more of a bipartisan issue and may well be a positive for the market. So I think it's more of a policy misstep, making a mistake on things like NAFTA, for example, was one of the things that comes to mind. But as far as Washington being the big threat to midterm election cycle, I think we're probably going to get some balance put back in the market. I don't think anybody wants to have a major faux pas heading into the election cycle.
And Art, just taking a step back here, what do you think is the top risk for stocks in 2018?
Yeah, I think that's something we should always be conscious of. I think that the yield curve has gotten very tight and continues to border on being flat, and an inverted yield curve and a levered economy that we're in right now with hundreds of trillions of dollars in leverage out there would certainly be a disaster. So I would keep a very close eye on the yield curve. The short end of that really very much controlled by our monetary policy, our Fed policy. The longer end, though, unfortunately anchored to the other sovereign 10 years. So keeping a close eye on the yield curve, probably the first and foremost, it should be in everybody's mind. I certainly think it will be in the Fed's in terms of how aggressive they'll get with monetary policy. Secondly, I think that the geopolitics, whether it's North Korea or anywhere in the Middle East that are boiling pots that could escalate into something that's more of a military event that could certainly turn into an economic event. And it's very difficult to model and hard to predict, but keeping a very close eye on that. I think that third and probably as important as anything else is cybersecurity. I think that if you were to consider the right hack at the right time, taking down something like our banking system or the electrical grid or anything like that. I think we have to remain ever vigilant towards cybersecurity. I think there's a lot of great companies doing a lot of great work on that end, but it's a battle we have to continue to fight.
Yeah, certainly an area to continue to keep an eye on. Speaking of places we're watching, cryptocurrencies made a big splash last year. Talk to us about 2018, what to expect with Bitcoin.
Yeah, it's amazing. It's hard to, it's hard to look at Bitcoin and say that, I can clearly predict whether it's going to double in price next year or if it's going to get cut in half or worse, right? So it's a new phenomenon, and it's worth as much as people are willing to pay for it. I don't think there's enough of an understanding in the current speculative investor base for Bitcoin to make a rational decision whether it's, it may well be worth exactly what it's trading at, and it may well be worth far less or far more. I think we're going to learn a whole lot more about the blockchain and what that means in terms of its transactional value and its safety value in terms of transactions getting and things of that nature. I just don't know that any of us can pick, which one of the cryptocurrencies is going to be the winner. And I think there's going to be a whole lot more cryptocurrencies out there than we saw last year, and I don't know what that does to the price. So, with that, I will tell you, I think blockchain is going to be with us for a long time. I think I'd be hard pressed to make a prediction as to what Bitcoin could be worth, this time next year.
Yeah, probably best to play it safe given the volatility we've seen, not just in Bitcoin, but the broader cryptocurrency ecosystem. Art, we're going to leave the conversation there. Thank you for joining us and giving us your predictions and what to expect in this new year. We'll keep an eye on the markets and your target of 3,000. Art Hogan, of Chief Market Strategist at B. Riley FBR. And that does it for us on Trading Nation. I'm Seema Mody. Have a great day.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.